Hello, I'm Adam Werner, Wealth Manager with the Haas Financial Group. Today, we're going to give a quick tutorial on Riskalyze and their risk assessment. So when you click on the email or click on the link in the email that we sent you, it will bring you to this page customized directly for you. And feel free to click the Get Started button. So on the front end, there is a couple clarifying questions that the tool will ask. For our purposes, these aren't necessarily a requirement. Again, feel free to fill out if you have a couple priorities you want us to focus on. We've probably had a few meetings to this point, so this probably won't be news to us. You don't have to click anything here to move forward. For our purposes today, I'll choose retirement. That's a very common reason that people come to us. This next page is anything interesting in terms of employment, inheritance, major expenses, major life transitions. Again, you don't have to fill anything out here. You're certainly free to, but you do not have to. The important part of these questions on the front end, the dollar amount here does matter. So when the question asks here, how much do you have invested right now? We just want to make sure that this is all encompassing of your investment assets. So whether that is accounts you have invested with us, maybe it's a retirement plan through work, maybe you have other accounts through an outside or through another investment provider, Vanguard, Fidelity, you name it. The tool for our purposes here and to use this tool to the best of our ability, we really want to be able to look at your entire investment pool of assets to really find what your breaking point is from a risk perspective. So it's important to make sure that we have that dollar amount at least as close as we possibly can. Now, we probably have some information here. Sometimes this may already come pre-filled to you, but certainly if it's off, feel free to update it. And then there's one last question here. Again, for our purposes, not important for the risk score. Riskalyze has other tools that this factors into. But again, for our purposes today, feel free to skip it and we can get right to the meat of it. And I'll use the term fun, but this is the fun part of the process. And I think it's also the trickiest part to start because what the tool is trying to determine, again, I kind of alluded to it earlier, is at what point with your investments do you reach a breaking point that you call us up and say, hey guys, I can't do this anymore. I don't want to be invested this way. I've seen losses, we've seen market volatility, and I need to be doing something different. Ultimately, we want to avoid investing in a portfolio that you won't be able to stick to over the long term, especially because we know that market volatility is a normal part of the investing process, but sometimes that volatility won't necessarily be comfortable and it can last a little bit longer than we also may be comfortable with. But this first step is to identify kind of where is your baseline. And we often talk in terms of returns as a percentage, right? So up 9% or down 9%. But really where I think we draw your attention to for completing this questionnaire is the dollar amount. Because oftentimes that's the more psychologically impactful side of the investing process, right? You open up a statement, you see that you're down on your $1 million, you're down $88,000. That feels more real than, oh, I'm down 9%. And maybe that's a good thing. That slight disconnect. But for our purposes, we really want to hone in on at what point, again, if you lost $88,000 over a 6-month period, would you want to do something different? Is that something that you could stomach? So we'll stick here for now, but really you can move this slider to your heart's content anywhere from 4% all the way up to 20%. But we'll kind of stick here in that, well, even we'll say 10%, $100,000 on $1 million over a 6-month period. We'll say is kind of my baseline. Then we can click through the next couple of screens here. It'll just be clarifying questions to really pinpoint what are we focused on or what are you focused on from the investment side of things. And is that, again, we don't believe, so looking at our original choice, that the risk and reward should be a 1-to-1 ratio. Historically, we know that there should be more upside reward for any given level of risk. So with that kind of as our baseline, the tool wants to determine which side are you more focused on. So if we can take the same 10% downside risk, but we could get a much higher reward, going from 10 to potentially up to 16, is that more natural as a selection for you? Or is it more, I'm okay with that 10% to the upside, and in return for a little bit less risk, right? 6% to the downside instead of 10%. I should say there are no right or wrong answers in any of these clarifying questions. It really just comes down to your personal preference and your outlook on your portfolio and on risk. So for purposes here, we'll click more reward for that same level of risk. And the tool's going to ask us another time, would we be comfortable with even more return for even more risk? And now it starts to get maybe a little bit trickier to kind of make that decision. But again, what the tool is trying to figure out is your breaking point. At what point does this downside number not feel that it's something that you could stomach? So for our purposes here, again, I'll say we'll click that same more reward for risk. And then the last question here to clarify is a minor movement. 16% versus the 17% on the upside, 10% versus 11%. Feel free to choose whichever one you feel fits you best. And at the end of all of this process, it's going to give us a risk score. This risk score is on a scale of 1 to 99, 1 being cash with no investment risk, and 99 being the riskiest stock that you could think of. And again, going back to kind of the beginning, it gives us in a 6-month range, a 95% probability that you will fall somewhere between negative 9.9% and positive 15.6%. And in terms of dollar amounts, that's kind of where we want to focus. If this does not feel like those guardrails are comfortable, you can go back through, you can click this try again button, move your slider to a different point at the beginning and go through it again until you get to a score or some guardrails here that feel comfortable for your situation. The key point here is once you're done, make sure you click on the yes, that feels like me button. That will archive your score within the Riskalyze tool. It'll also trigger an email to us so that we know you completed it. And then we can go through the next steps in our conversations to determine if your investments align with your approach to risk using Riskalyze kind of as our baseline. So if you have any questions, feel free to give us a call or shoot us an email. We look forward to meeting with you, and thanks for watching.